Welcome back. I'm Juliet Foster, and you're joining us again for MoneyLIVE Autumn Festival, the big meet-up. And it's good to meet up, to actually see each other face-to-face rather than talking through tiles. But what we're going to do now is look at open banking, take the journey in a little bit more depth, the exploration. So we're going to be hearing from industry leaders from ING, NatWest, HSBC Mode and Cognizant. They're going to share their thoughts about how the open banking landscape is evolving. So to get things rolling, we're going to hear from Olivier Guillemond. Now, he's the Global Head of Innovation Labs and FinTechs at ING, and he's going to be joining us remotely. He's going to be talking about partnerships, new business models, and the next steps for open banking innovation. But before that, I want to introduce you to our pundit for the session. Well, I wouldn't really call him my partner in crime. We're sort of LinkedIn best friends. But his name is Peter Neufeld. There he is. Hi, how are you?
I'm very good, thank you. Sorry I can't be there in person.
Okay, well, look, it's a shame you can't join us, but you've been quite busy today because other people may have seen you. Is that correct?
Yeah, I was there. I was on this morning doing a pundit role with one of your colleagues. It was really fascinating conversations. Talking a lot about how the customer experience is changing. And I got quite excited about the new invisible interface, which we're all going to be needing to understand how to use more effectively.
I'm a bit worried. I feel betrayed. I thought I was your only BFF.
Well, you're the only one. I've got to be polite to the earlier co-host, but Juliet, I mean, they wouldn't let me out. Otherwise, I'd be right there alongside you.
Okay, I feel really reassured. But look, for those of you who didn't meet you this morning, can you just tell them what it is you do and for whom?
Yeah, hi. So I'm Peter Neufeld. I'm a partner at Ernst & Young. I lead our customer experience and digital capability for financial services across EMEA. And I also run our EY Saren capability for financial services, which is an agency focused on human and purpose-centered design, really helping banks and financial services organizations become human-centered in the way they change, alter, improve digital services, focusing a lot on financial well-being, and also focusing a lot over the last few years on sustainability as well.
Yeah, I mean, look, banks are on a massive journey at the moment. Open banking, banking, that is part of that journey. Given that so much is happening, what are the key things, the key developments that you've noticed and that you really feel we need to talk about, not just here, obviously, but beyond this?
Yeah, no, it's a great question. I think one thing that's happened is all of the banks in the UK, as part of a regulatory regime, have really invested in creating the open banking data architecture. And that's kind of a sunk cost for a lot of them. And what they've seen over the last few years is other organizations being able to get access to that data and do some extraordinary things with it. I think the second thing that's really fascinating is the amount of data that we can now bring together and analyze allows us to really understand more about a customer's financial life than ever before. And if we can take advantage of that data, we can provide really unique to help them improve their financial well-being, make better choices and decisions. I think the third thing that's really fascinating, coming out of the lockdown experience we've all had, is every consumer in the UK has become an expert at using digital and virtual tools. And that means more and more people are engaging in making financial decisions through tools like the mobile devices, online banking, or even virtual conversations with financial advisors. So the opportunity to take advantage of that data and to make it make sense in the moment, I think has a lot to offer. And I think we see a lot of competitive activity trying to come to terms with how best to make that manifest in the experience.
And it is fascinating, isn't it, Peter, very, very briefly, because yes, this open banking, it's helping banks to be more connected, to be more agile, to do a lot more. But at the same time, we shouldn't forget that as customers, it's making us more empowered in terms of what we want, how we go about getting it. And it does beg the question, who's driving this? Is it the customer? Is it the bank?
Well, I think more and more it's going to absolutely have to be the customer. I even think back a few years ago when the regulation was first taking effect and we talked to customers in the UK, they had no idea what open banking was. In fact, many consumers in the UK don't really understand what the data being held by their bank actually is. Is it my daughter's birthday? Is it information about my home address? What is the data being shared? And I think a lot of consumers still are quite cautious and concerned about the potential identity risks, cyber risks. So I think there's a real important opportunity in the market now to really help rank and file citizenship and customers understand what is the data that we're using and how is that data being used in such a way to benefit them? And also, how do we help them keep safe? Because there are, what we've seen during the lockdown period as well, there are a lot of bad actors out there using this period of anxiety to take advantage of customers.
Look, plenty there to talk about throughout this session, but we're going to break off for the moment, Peter. Thank you so much for setting the scene there. Because what we're going to do now is we're going to hand over to Olivier Guillemont from ING, and he's talking to us remotely. So, Olivier, over to you.
Hello, everyone. My name is Olivier Guillemont. I'm working at ING Bank, exactly at ING Neo, which is the business area where we have grouped all our innovation activities. I'm thrilled to be here today. What I want to talk to you about is how we do partnerships at ING and how we use partnerships to launch new business models following open banking innovation. Hopefully, you'll find it interesting. I'll try to make it as pragmatic and as transparent as possible so that it can maybe hopefully inspire a few conversations just after. So let's get started. First, maybe a very, very quick intro on ING Neo and what it is. So we launched within ING earlier this year, ING Neo, where basically we grouped all our innovation activities, disruptive innovation activities into one business area. Obviously, it's very much linked to ING core objectives around customer engagement, fee generation, always cost efficiency, obviously, but also obviously digitization and data-driven solutions. And when we launched ING Neo, we thought, okay, innovation is wide. Where do we want to focus? Because we can't focus everywhere. So we did an exercise where we identified what we called value spaces, which is basically where right to play comes across with enough potential for disruption. And we came up with those 5 value spaces. And we on purpose do not see here banking product, right? So it is related to obviously banking product, but not only, because we do innovate for ING first and its clients, but we want to be adjacent innovation to banking. So, for instance, mortgage being a very important part of our business, we want to help our mortgage businesses, but we do that to look after housing as a whole and to stimulate that, let's say, value space, because we believe that if we do so, then automatically our mortgage business will benefit from it. Same for trade. ING is a very big trading house in terms of trade finance house, but here we don't talk about trade finance, we talk about trades. So if we're able to stimulate the trade ecosystem, we believe that our trade financing solution will benefit from it, and so forth, and so forth. This is also how we came up with financial health, obviously lending being very important to any bank. And last but not least, safe and compliance, because, RegTech, KYC, cybersecurity, and so forth become a very important part of any large corporate, any large financial institutions, including ING. Also here, we believe there is a lot of innovation to be done at scale. And we are doing it focusing on the more disruptive horizon model that we use. So we are supporting the bank in anything around incremental innovation. And we want to be the driver when it comes to, let's say, H2, H3 innovation, where we are building something new for the bank and for the world. And at the end of that journey, basically, it can crystallize into different outcomes. One being the possibility to partner with a fintech. Today, we have a lot of fintech partnerships, and we have dedicated fintech team around the world that looks for the right partner. As we are doing this, sometimes we like to invest in those fintechs throughout our venture fund called ING Ventures. Today, we have 35 investments in many countries with a strategic return ambition. And when we cannot find the right fintech to solve a particular problem, this is where we start building our own fintechs in ING Labs. And we have, today built around 7 actually assets that are now available for, on the market, and we have many more in our funnel. So how we do it is actually by following a very structured innovation process. So we start by research. We analyze trends, market trends. We also obviously look into the priority from an ING perspective. We work with our clients to understand what is important to them at this moment, and what are the pain points that we like to be solved, which then feeds, let's say, a collection of opportunities aligned with our value spaces. And then we apply our innovation methods that we have, let's say, developed for ourselves, which is called PACE, which is basically our custom-made mix of three well-known methods, whether it's agile, whether it's design thinking, on startup, we mix it, we apply the ING sauce on it, and here it is PACE. And what it does basically allows us to have a stage-gated approach to a specific problem. So once we have finished discovery, then we look into problem fit, then we move into solution fit, and then we look for product customer fit and then market fit. So throughout this journey, our aim is to invalidate as quickly as possible, or to validate as quickly as possible, very clear assumptions. And those assumptions then, and the result of that, should allow us to decide if we move an initiative to the next phase, right? And we have, let's say, a specific funding mechanism and a specific governance around that funding to release, let's say, the funding of the next phase if a venture has been able to collect enough evidence that and enough insights that we are good to proceed to the next phase. And more often than not, it will not happen. So more often than not, we will stop, but we want to be able to fail early and to stop early. Then it's not a failure, it's really a learning. And for those who are graduating for that process, then basically there are three options. Either, and depending on, let's say, the level of strategic fit, and depending on the dependency on ING, either we spin in the venture into ING and becomes a business of ING, or it remains at arm's length into ING Neo in what we call a scale-up, controlled by ING in this case, but at arm's length. Or when it makes more sense for the venture to partner in order to provide the best outcome for ING, then we looked for a spin-out, whether it's going to be attracting VC money, whether it's going to be a consortium, whether it's going to be a joint venture, whatever, let's say, brings the highest chance of success for the venture and the highest impact for ING. So basically, this is how we play the innovation game in a very structured way, with the ambition to basically generate big bets for ING and its clients. So now that I've set the scenes, what does that mean for the topic of today, and how do we partner? Well, basically, we partner in two different ways. Either we leverage this partnership outside in, so we bring a partner into an ING platform, if you will, or an ING channel, or it's reverse. We are building actually an asset within ING following the process I just described, and then basically we are proposing it to the world in collaboration with. And this is also where the open banking innovation comes into play. So I will spend a few minutes for those two models, because I believe it's important and interesting for maybe for you to think about and to work with us alongside those two models. So first, the outside-in partnership. So I put here a few concrete examples of type of partner that we are really in bed with, if you will, for what we believe are important reasons. So I will start with two examples in embedded finance. And today, open banking, embedded finance is a very buzzword. So at ING, we are taking that very seriously. Where basically we look into the two models, right? So inviting partners on our ING channel or playing on someone else's platform. And on the later setup, we have partnered and invested with a company called Divido that you may know in the UK, which allows, let's say, us to provide point-of-sale lending solutions, let's say, at our e-commerce clients and retailers. So very important for us. We can actually propose digital lending to a point-of-sale and leveraging, let's say, Divido technology, which is a very interesting technology for us. Also in embedded finance, but in a different model, is what we are doing in Germany with Amazon, where basically we are proposing merchants who are on Amazon pre-approved SME loans based on specific characteristics. So that is something which is a partnership which is very important to us, very strategic, also because it's for us something that we do with our with the company that we bought in Germany called Lendico, which is an affiliate focusing on SME lending. And we also leverage that partnership to really grow the new franchise that we have, because we just opened this SME franchise in Germany. So it's a very interesting way to not only partner with in interesting companies where there is a lot to learn from each other, but also accelerating, let's say, our go-to-market strategy in the SME space in Germany. So for those two examples, is basically leveraging someone else's platform to grow our business and propose our product in a very digital way. And then we have the other side of the story where we are inviting, let's say, partners to play on our platform. So, for instance, with Mina, that we have tested through our labs in Brussels, we're able to provide our users of our app the ability to very easily make a list of all the subscriptions that they have on their account, and the ability to cancel or to switch to a better abonnement. And that's very, very interesting. Also, MyTech, for instance, is a way for us to standardize the way how we do remote onboarding, leveraging their cutting-edge biometric technology, so that we can remotely identify and verify that our existing customers or new customers are who they say they are. And last but not least, but more on the processing side, we are leveraging Eigen technology, and we are partnering with Eigen. We also investing in Eigen to make sure that we leverage that technology to very quickly, let's say, turn document into insight that we can then include into our automation processes. Very interesting partnership, very wide across different geographies, different units throughout our documentation processing, let's say, operations. So those are 5 examples of how we want to benefit and partner with outside-in experts in order to accelerate our journey, either on our own platform or by providing our services and products in a very seamless way into somebody else's customer journey. What also we believe ING interesting is that, and our approach interesting is that it's the other side as well, where we are building our own asset in our labs with a view to partner with the world. So being actually the fintech and looking for to partner with financial institutions and corporates along the world. So I just want to give you 3 examples of real businesses which are today live and where we want to partner with, let's say, the ecosystem. So the first one, the first two are in the KYC safe and compliance space, and the last one is a very different beast. So I want to spend a few minutes on each and every just to make it very concrete and see whether it could resonate with you. So starting with blacksmiths in the safe and compliance KYC domain. So what we, in our research, we realized that like a lot of financial institutions need to have policies in place, obviously. And all of them have KYC policies where we need to define how we want to do KYC, whether it's an FI or whether it's a corporate. However, our research also shows that even though every FI needs to have a KYC policy in place, all of them have their own interpretation of what it means in practice. So this is why we created Blacksmith, which is basically a digital policy manager where each FI can, let's say, define in a very granular way, in a very programmatic way as well, what a KYC policy means to them, and what are the requirements that they want to actually apply to their clients and to their FI connections. So this is what Blacksmith is doing. On one hand, is allowing any FI to programmatically define its KYC policy, and then to apply it to, let's say, the publicly available or the information available of a company. And what it does with the combination of the two, the data source combined with digital policy manager, is to create automatically the CDD file of the FI. And we started with the FI persona, but we have the ambition to go obviously way beyond. But even today, solving and having the ability to generate this CDD file for FIs, it's getting from us, for ING, at least internally, we use Blacksmith more than 50% of the time of our FI KYC analysis, which is a huge saving and a huge gain for ING. So we believe that if we're able to solve that pain for ING, we should be able to solve that pain for all the FI in the world who are looking to have a better, efficient way of defining, let's say, CDD files for financial institutions. So also here, now we build it for ING, we make it generic for everybody to use, and now we really want to work with the market and with the ecosystem to scale, let's say, blacksmiths around the entire world, basically. So really leveraging open banking and innovation around the ecosystem around KYC. Staying within KYC, we also developed Corp ID. So also here, we looked into the problem that we saw each and every corporate in the world had when it comes to KYC. Because obviously we are reaching out to our clients, we're asking, we are doing CDD on a regular basis based on their risk level. We are at the beginning, but also throughout their journey. And if you are a corporate today, if you're a large corporate, you are multi-banking. Most of the time, you have multiple banks in multiple jurisdictions. So you are submerged by millions of emails asking you to collect every time the same kind of information. It's just in a different shape or form through different channels. It's very risky because it's a lot of information going through emails. It's very repetitive, not efficient at all. So then we say, okay, we could partner with banks. That's one thing, but actually the need for KYC sharing goes way beyond banks. Today, large corporations need to share information with, regulators, with notaries, with insurers, with banks, and so forth and so forth. So we thought, okay, why don't we put ourselves in the shoes of the corporates? Why don't we co-create actually this KYC vault with our corporate clients so that corporates can, first of all, store their KYC, their most up-to-date information into a very secure vault. But second, allowing to share that information to whoever they want, only when they want it, only when they need it, to whoever they really has the right to know for that information. And that's how we co-create Corp ID with a view, with a corporate eye, if you will. And today, Corp ID is ready to be used. We have hundreds of corporates onboarded. It's massively used by ING. And also here, we believe that it's time for Corp ID to be used for as many FIs as possible and as many corporates as possible. So also here, we are looking to partner with, with the entire ecosystem in the world, basically, for large corporates, for any FIs, anyone that needs to do, let's say, KYC, whether you are regulated or whether it is basically you are subject to the request from a regulated entity. So also here, we're looking to massive collaboration with the market and to scale Corp ID around the world. Maybe last example and not least, it's called Crosslink. It's completely, let's say, fresh. We just, let's say, decided to go to the market a few weeks ago. And what Crosslink basically does is it's a software that generates software. So it's allowing basically, so the pain here that we have identified is for any FI, and including ING, we have a lot of legacy solutions, right? Which are expensive, difficult to maintain. And we all want to move into a world where we have modular, modern services so that we can easily maintain, also easily embed. And that's basically what Crosslink allows us to do, is to say, okay, we start from a legacy solution, and basically we are able to take a step back, think about what is it exactly that this application should solve, is able to program the requirements that an application should meet, and then through a, let's say, specific language that the team has, the venture has thought about, generate the application that meets all those requirements. And when you do that, you not only meet the functional requirements, but also the non-functional requirements, which are bank grade, so very, very high profile. It's really a printing software, if you will, that we have tested first in our Western banking part, because we feel that is where there is a lot to gain. And we started in the trade space. So today we have generated our our working capital solution software through this Crosslink toolset. We are now also doing it within two other parts of the trade business. And what it allows us to validate is that actually it works. And now that it works, we can print and replace each and every application in a way which is structured, which is much quicker, much cheaper, yet not compromising at all in terms of functional and non-functional requirements. And once those modules are built and printed, they can be basically reused by anyone in that business. So we are now reaching out to a lot of FIs, our FI partners, to say, hey, don't you want to use either a Crosslink module that we have printed already, which is working for us? And if it's working for ING trade business, it should be working for your trade business as well. Or using the Crosslink platform for you to be able to print the software that you want for your custom-made requirements. So we are very pleased to be able now to bring Crosslink to the world, and we are now looking to basically partner with FIs around the world to prove the value of Crosslink for their Russell banking. For us, it's a very impressive and let's say game changer, and we believe that we want to bring that technology and that innovation to the market. So those are, let's say, 3 examples of let's say fintechs that we have created into the ING, but now are ready to partner with the world. For everybody to be able to benefit from the advantages and to scale successfully those innovations in the ecosystem. So maybe to close, a few lessons learned, because along the way we have started this journey, already 5 years ago, and we have learned, along the way. Sometimes the hard way, but definitely a lot of learnings to share. So first of all, it's about having from the get-go a very clear partner versus buy versus build strategy. We never aim to build everything ourselves. We prefer to partner if there is something which is existing, which meets our criteria, and that can really help us to go faster to the market and faster meet the requirements. But having that clarity upfront is really helpful, because this also provides clarity within your organization in terms of combining business with tech, having the right approach to also how do you build your tech stack in order to be able to integrate whatever partner you want to integrate, and leaving the space for building your own sauce on top. So that's very important to have that very, very clear from the start. Having said that, before thinking about solutions, the most important part is really to focus on, to fall in love with the problem, right? To really focus on the problem at hand and not go too fast into solution, to make sure that we solve, the large enough of a problem that is really causing the pain to, for a lot of basically personas out there. The third one is to make sure that to have a clear framework how we want to partner, right? So how a good partner look like, the ideal partner profile, if you will. And for that, we have defined along the years, a very clear, repeatable framework, which has been pre-approved with all the different functions within ING, whether it's risk, financial risk, non-financial risk, tech, but also business, and so forth and so forth. And we found it very useful to have this repeated way of applying the same framework we're looking for a partner. So for instance, we realized that for us, partnering with a too early stage company is not working. So one of the criteria first that we have set out for ourselves is that we only want to partner with someone that actually went through one onboarding with a regulated company. And we found this decisive criteria for success when it comes to partnering. And it's a good segue to the fourth one, right? To have upfront success criteria and shared KPIs is obviously a very important recipe for success. We don't partner to partner, we partner for a very clear business goal, and that goal should be able to translate it to very clear measurable KPIs, which should be upfront agreed with our partner, because we should be incentivized to reach the same goal altogether. It's also a great way to get to know each other better and to make sure our culture are, let's say, compatible, and that we are aiming at the same direction. And once the success criteria have been set up, what is important is keep on measuring where we are on the journey. Did we meet those criteria? If yes, that's great. If not, why not? Then should we change them? Should we just stop the partnership, or should we just refine and basically optimize for scaling as we move forward? So this is really, but you can only do that when you have this repeatable, let's say, setup in place and having that shared ambition and shared culture. Once this is the foundational are there, then everything can be discussed basically. And obviously, we do aim to reach those KPIs in time and as quickly as possible. But if we have the commonality in place, we can always have a good dialogue, which will help, let's say, getting to the shared ambition in the most efficient time frame. So those are a bit the lessons learned that we would like to share with you when it comes to partnership and also how to bring those innovations to the world for scaling success. So thank you very much for your time. Hopefully it was helpful. If you have any question around anything I just mentioned, whether or any concrete examples on Corp ID, Crosslink, and Blacksmith, do not hesitate to reach out. Otherwise, you can always reach out to me on LinkedIn. I'm looking forward to that, and enjoy the conference. Thank you very much. Goodbye.
Thank you very much for that, Olivier Guillemont. Now, there's a lot to pack in, so many themes covered in that. What we're going to do now is go to the fireside chat, the metaphorical fireside chat. And in this particular discussion, we're going to be exploring how to develop an effective API strategy from the designing and management processes all the way through to the potential for monetization. Now, it is a big subject, which is why I'm joined by Dan Globerson, who should be joining us in the next few seconds, in fact, remotely. Great. It's good to see you, Dan. Thank you so much for being here. Before we hit the ground running, can we start with you telling the audience here what it is that you do and for whom and where you're calling in from?
That sounds great, Juliet. And I suppose I should preface by saying I wish I could actually be there. I live just outside of London, and I became a bit ill over the past week. Thankfully, from about 5 negative COVID tests, but I was concerned if I came into the QE2 Center coughing, that a little black van would come up and I'd never be seen again. So I'm dialing in from home, a little congested, but hopefully you can hear me just the same.
We certainly can. Thank you so much. And it's good that you're on the road to recovery as well. But very, very briefly, can you just let the audience know what it is that you do and for whom?
Exactly. No problem at all. So Dan Globerson, I'm the head of the Bank of APIs at NatWest Group. Essentially, my role covers, and that of my team covers, a few things. The basics that everyone would be familiar with around open banking, policy and regulation and implementation, both in the UK and any of our locations abroad. We also drive a API ecosystem growth. So we are building a bank of APIs. That's why we have bankofapis.com as our domain. And we work across our franchises and partners in developing new propositions, which I know we're going to be talking about shortly. And we provide a fair amount of insight and advice and counsel both to the government, industry, and internal execs around what the world of open banking, open finance, and open everything looks like, Juliet.
Okay then. I mean, look, there are so many different types of banking APIs. You've got open APIs, internal APIs, composite APIs. I don't want to go through the alphabet, but what are the key differences amongst the ones that I've referenced?
Could you run through those again, Juliet? I'm not
sure. No, that's fine. Open APIs, internal APIs, composite APIs. Those are just 3 selected from a vast myriad. But could you simplify it, just explaining the key differences?
Yeah, and that's something that actually, I think as we move forward and as our industry moves forward into a more open environment and open ecosystem, we'll probably stop talking about the qualifier in front of APIs and just talk about APIs. I think one thing that's interesting is if we look at some of the most successful companies in areas like e-commerce, and I won't use names, of course, because that's not appropriate, but we'll see that over the past decades, they've built up their capability and their place in the world based on externalizing all of their services and not putting a qualifier on what kinds of services those are. I think the only qualifier is really about who might access that service, what they might use it for, who benefits, is it secure, and the rest. So I myself try and stay away from internal versus external versus composite, et cetera. I think it's actually, I think we're facing into a world where we're going to need to externalize everything we do.
But given that, we know that APIs, they have accelerated industry collaboration. So from your vantage point and with your breadth of knowledge, what do you see as the most exciting collaboration you've seen in the banking ecosystem that has got it right? It delivers what's on the side of the box.
That's an amazing question. I think we're early in the story, and I think we're all familiar with an old adage around, we tend to overestimate impact in the near term and underestimate impact in the long term. And I think that is absolutely true in this space. I don't think there's one innovation. I think we've seen some great innovation coming out of a few markets. There's a few banks out there. Again, I won't use names, but in Singapore, going back around 3 or 4 years, in Spain, going back a few years, I think we saw some genuine pre-open banking innovation around new payment types, around how do we create ecosystems, around how do we expose financial services into channels that might be more convenient or more relevant to a particular customer journey. And in each of those, I think we've seen some great things. I think we've seen, from the embedded finance space, I think we've seen emerging payment types, which offer great benefits in terms of cost and liquidity to merchants, and customers seem to be on board as well. I think we've seen some great business digital services. Again, in some of the Far Eastern markets, we've seen digital ID agreements between banks and government entities. And again, that's a huge enabler. I mean, the emerging digital economy is one that demands assurance of who the participants are, and recognizing that banks are probably the most heavily regulated. In fact, we'll be honest, the most heavily regulated player in the economy, maybe short of medical, but that's probably debatable. I think there's a huge amount of innovation coming out of that space to leverage what banks have in place. And I think our previous speaker brought out a few great examples as well, particularly in the KYC space. Again, maybe not the sexiest things, Juliet, in the world. It's not mind blowing, but it's a game changer in terms of how do we move from a physical in-person economy to a digital economy. I think rapid innovation is another one. I think any of the banks, particularly a lot of the new digital banks, but even some of the incumbent banks that are beginning to evolve towards an API-led strategy, I think we can see those players are delivering more innovation faster than others, which again, in the end, helps customers out. And of course, the big one for us and for me is the ability to partner. I think an institution that's fully API enabled is one that can rapidly partner, and we move from these 12 and 24 month scenarios to build a prototype and convince everybody it works, but not having real data and all the rest, to let's connect today, let's have a look tomorrow, and then the day after, maybe we'll ask a few customers, and in a matter of weeks or maybe even a month or two, we can bring something new to market. So I wouldn't say it's one innovation, but I think it's the amalgamation of innovations across multiple markets.
A good point as well, because yes, it does actually help the mechanics of the banking system, taking it along to the next level of that journey. But what about the customer? How do you see APIs being used to develop those new services that we, the customers, are apparently calling out for, and at the same time bringing real value to the customer experience? Get it right, we stay with these banks.
Yeah, I think that's it's an interesting question. I think sometimes we, if you don't mind me saying, we can probably be a bit presumptuous about what every customer wants. I think we, sometimes as an industry, we talk about, hey, everybody wants to have financial health. Well, of course, who wouldn't? Everybody wants financial well-being. Everybody wants real-time everything. And there's probably a little bit of truth to some of that, but at the same time, I don't think we can just assume what everybody wants in the ecosystem, and what customers want. Some of the great things we're seeing is what makes customers' lives easier. And that's always the biggest thing. What makes it easier for a customer? I think a personal customer, what makes it easier to obtain products and services at a reasonable price, when you need them and where you need them? That's a huge benefit of an API-led ecosystem, bringing the capabilities into channels where customers are experiencing new things, where they need the services and where they've got faith that those are secure services and competitive services. So I think there's a huge upswing there. I think in heavily regulated industries, financial services, including insurance, pensions, and beyond, and even into medical, I probably don't want to jump too far out, but we talk about the ability to identify and know who our customers are and know who our patients are. And I think that's another great place where the amount of overhead all of us have experienced in our lives obtaining financial services is extreme. And the ability to use open banking and open finance to prove that it's me, to carry digital IDs and digital passports and the rest, or to share some information with others, just makes customers' lives easier. And I think one thing we've learned in the digital economy is frictionless means people are more likely to do things and ideally do great things. So providing frictionless journeys to sign up for new services, great. Frictionless journeys to help manage financial health, great. I think those are amazing steps in progress. And on the business side, businesses aren't alone. It's not just about people. For businesses, it's the same. I mean, business owners have a lot going on. And again, the ability to establish a new trading relationship, establish a new credit relationship, those are hugely time consuming and actually impact the well-being of some of those business owners. So I think there's a whole lot in there as well. Again, I'm not sure it's all about real time, flashing lights, everything's there at that point in time. I think it's about removing the friction and improving the convenience of accessing financial services.
And let's stay with that idea, because yes, you can make the lives of people easier, but at the end of the day, APIs have to be managed. So given that, what constitutes best practice?
Yeah, it's a broad question, and it oftentimes probably evolves into a question of comparing, vendors and software. And I don't think that's really what it's about at all. I think, Juliet, certainly when it comes to API management, it's really about a full consideration for the API ecosystem. So I think oftentimes we think about APIs, I want to put a new API in place, that's great. I think when we talk about standing up APIs, we talk about what attaches to those APIs that enable that API to be of value, both inside and outside an institution or a bank or anyone else. And so from that perspective, API management is about ensuring there's a flexible security model in place. API management is about instantaneous availability on portals with appropriate developer engagement and and details. API management is about instantaneous availability on sandboxes to try it and test it. It's about having a support model in place. So as soon as an API goes live, there's a guarantee of support around it, as well as performance. And I'm going to probably step into even monitoring and availability, which I think is also huge. As businesses that have been around quite a long time, who historically haven't been that heavily involved in the API space, I think a fair number of banks just standing up an API seems like an incredible step forward. And we've seen it in open banking in some cases where hundreds of new APIs, however, the experience of using those isn't necessarily where it needs to be. And so I think monitoring is another great place of that in terms of how do we know our APIs are working? Well, certainly best practices in that case, I think, is to be your own consumer of your API. For instance, at our institution, at our bank, we monitor APIs, not just internally. Of course, we have to do that, the technology and systems and platforms and data centers and all those things. But we actually set up cloud instances that fully simulate API access, actually make 24 hours a day, 7 days a week, API calls every minute, every second in some cases, into our hundreds and hundreds and hundreds of API endpoints so that we can see exactly what a consumer would see on the other side of that, an API consumer. And I think that's certainly best practices. So I think it's twofold. One, ensure that when you bring an API into the world, that it's brought into an ecosystem. It's not just another endpoint, because that's not something that's engaging or particularly usable. And two, ensure that you're your own toughest customer and that you're sitting on the end of that API 24 hours a day. And that ideally, before anyone else does, if it's either slow, unresponsive, or it's down.
Dan, we've only got a couple of minutes left, so let's see if we can squeeze in 2 more questions. But what do you see as the potential here for a new source or business models to emerge coming out of APIs? And it's not just APIs themselves also, but banking as a service. Where can you make money on it effectively? How do you monetize it?
Yeah, that's always the big question everybody asks, how do you make money at it? And I think that I think it's a question of relevance. And I think that, again, maybe we're sometimes not sure where the world's heading, but in my mind, the world's clearly heading towards a very, very digital existence. And I know it's a big one for people from my generation to imagine that somebody actually might want to live in an entirely digital world. That's a little bit, new, strange, and different. But we're in a place of kind of moving from a physical world to a world where we engage digitally around a lot of commerce. The economy is highly digital, and we're moving well beyond that rather quickly. So I think from that perspective, I think it's one of maintaining relevance, ensuring that a bank, a group of banks, are actually have products and services which are stood up individually, which are at a component level, which can be reorchestrated in a digital world, that can be delivered directly via that bank's own channels. It can be delivered via partners. It can be leveraged as banking as a service to provide services not just to those that don't compete with you, but also that do compete with you, and that there's a great opportunity there. I think if you step back almost and you say, what's the revenue opportunity of each one of these plays? I'm suspicious that's probably not forward thinking enough. I think being forward thinking is recognizing the opportunity for relevance in a digital economy, and from that perspective, I actually think banks have a huge role to play. I think there's an excellent opportunity, highly regulated, highly trusted with data and privacy, a great player to have in an ecosystem.
Okay, look, time really is tight, so in 30 seconds, slightly unfair, when we talk about APIs, people say, look, banks need an API-first mindset. What is that, very briefly?
I think that's absolutely correct, Juliet. I think an API-first mindset means that when we think about products and services, we don't think about those solely within our own channels. We think about those being available and delivered in a variety of places, and that any service we stand up is one which can be immediately consumed wherever and whenever. That's an API-first mindset. That's the way to build for the future.
Okay, we're going to have to leave it there, but Dan, thank you so much for your time, and also it's good that you're on the road to recovery, so stay healthy and stay safe. Hopefully we'll see you in the flesh sometime soon.
You will. Hugely appreciate it. I really enjoyed it.
Thank you very much. So look, a really big discussion there, picking up on some of the themes that you saw in that presentation, the earlier presentation from Olivier. Let's go back to Peter, my co-host, for his thoughts. Peter, are you there? Can you hear us? You can hear us, can you?
I can hear you, yeah.
Yeah, that's fantastic. Now we can see you. That makes it even better. So look, you were listening to that discussion. Give us your takeaways on that, especially as you've got the presentation we heard beforehand to actually draw something out of, to merge the two.
Well, I'll tell you something. It's always fascinating to hear from ING because I think, for those of us in the banking sector, they've always seemed to be sort of at the forefront of innovation. And it was really fascinating to hear how one of the real critical areas of getting innovation right is both sort of, falling in love with the problem and really sticking with it, and also making sure that you're engaging with organizations at the right stage. And you heard from Olivier's discussion there that a lot of the focus was in and around powering up that customer journey with data, getting KYC, AML right. We know in our sector, we have to do that. We have to get it right. And it can be quite costly to get it wrong. And if we do get it right, there's an extraordinary amount of insight we can have. And I think to me, that just opens up this conversation about what is an API economy? What is an API first mindset? And when you heard Dan talk, I think what's fascinating there is 5 years ago, I think in the UK banking sector, we were talking about APIs, but probably more in an internal context. How do we pull data out of legacy systems? Talking about putting an incumbent bank's financial services product into another channel, integrating it into another experience, doing banking as a service in the marketplace. I think that's thoroughly innovative. I think the thing that Dan was pointing to, that organizations will have to get right to really seize that opportunity. I mean, one is the imagination, the business and innovation imagination within the organization. I think also getting really, really comfortable with stepping beyond governance and control of APIs and thinking, well, what is that end customer experience that I'm going to revolutionize? And what's that developer experience? Because more and more, the API economy is powered by developers and engineers who are taking those APIs and putting them into other channels and services. So I think it's a really fascinating time. And again, I think the last 2 years of pulsating has shown that we're really comfortable using digital and virtual solutions. We're really more and more across demographics of engaging with financial services in a new and different way.
And so much coming out of it. It's just really the final thing. I mean, you talked there about the customers because everybody assumes that it is customers who are driving this. He's saying, look, not necessarily. It's more the need. So when you're actually installing the APIs, and you're approaching the customer thing, look at it in terms of making their lives easier, not in terms of, look, this is what they're telling us they need. Just think outside the box.
Well, I think that's absolutely right. And I think earlier today we were talking about fast money and slow money. Talk about moving fiction, you're talking about fast money. Make it easy for me to do the simple, straightforward things. I can't necessarily, as a consumer, imagine how that's going to work, but banks and advanced technology and data can make it happen. And then I think when we think about slow money, like big investment, retirement planning, home buying, dramatic decisions we make, sometimes once in a lifetime, then I think the API economy is working in a very different way. How do I bring all of the insight and data and services around that decision so I can really get at the need and create an immersive opportunity for you to make the best possible choice at that particular time? But again, I think data is the fundamental fluid that's making it work and how we use that in the most meaningful way. And I think in this case, regulation and compliance are the differentiator, are the kind of competitive advantage.
Okay. Peter, thank you so much for your analysis, not just of that previous interview, but also with the presentation we heard from Olivier, merging the two together and giving us a real sense of the totality involved in this. But what we're going to do now is move on, because coming up, we do have a panel discussion. Again, we're sticking to that theme of open finance. We've got 3 excellent speakers who I've been reliably assured are waiting in the wings, but there aren't any wings because, in fact, I can see them. And they're going to be joining us for the discussion, which is coming up in the next few moments. They've got plenty to say on this session, so please do stay with us. You're watching MoneyLIVE Autumn Festival, and we're about to kick off with the panel discussion. The title, Accelerating Towards Open Finance from Concept to Reality. Okay, this is where I sit down and take a bit of a break. That's good. Because what I'm going to do is introduce everybody. I think you're familiar with what I do. I introduce them and then they tell you what it is that they do. So, Andrew Miller, it's very good to see you. So, why don't you tell the good audience what it is that you do and for whom?
Afternoon all. Work for HSBC. Head up the external engagement and strategy function for our global open banking shared service. So, across all of our markets, all of our lines of business, looking at both what we're doing now and also kind of what's coming down the line from regulatory and a non-reg sense, so a broad perspective.
Okay, thank you so much for that. And Rita Liu, it's good to see you too. So again, the same thing, if you can just tell the audience what it is that you do and for whom.
Sure. Hi, good afternoon. Rita Liu, CCO and Director of Mode. Mode is a LSE-listed fintech startup. We are building a wallet that's enabling businesses with a cheaper, safer alternative to card payment and enable them to reward customers with Bitcoin cashback. Previously, I was with Alipay for a long time. I was CEO of Alipay UK before I joined Mode. Nice to be here.
And it's good to see you. We're glad that you could join us too. And next up, we have Daniel Meir. Great to see you. So again, if you can just tell the audience what it is you do and for whom, that would be fantastic.
Thanks, Juliet. Good afternoon, everyone. Daniel Meir. I look after banking and financial services consulting for UK and Ireland at Cognizant. We act as the transformation partner for a lot of our clients. We help them to engineer modern businesses, a lot of which involves open finance.
Okay, well, look, it's good to see all of you, and thank you as well for taking the time out of your schedules, because I would imagine that you've got a lot on your plates at the moment. But look, let's reflect on 2021. Yes, the year is not over, but it's still been dominated by the pandemic and possibilities or the potential for further lockdowns. Let's hope we can avoid that fate. But from your respective positions, how have the events of the past year affected the Open Finance Initiative? Has it been derailed, or is it still full steam ahead? So if I can start first with you.
It's not made too many changes. I think we've seen quite a lot of disruption in markets like Mexico, where the regulators actually struggled to get out legislation. So it's actually pushed the entire agenda back by kind of 9-12 months. We've also struggled, I think, a bit with resourcing. So especially in countries, there was a time where India was very badly hit, and just having the right people with the right skills able to do the work, that did impact some of our deliveries. Apart from that, I don't think the market's slowed down too much. Everyone's kind of continued on and tried to cover the cracks as best as possible. I think as we go into next year, that should start to smooth itself back out again. I don't know what you guys have found out.
Yeah, I think, well, obviously it's a tragedy, but, in terms of the fintech, digital economy, it definitely went through a boom in the last 18 months or so. It definitely accelerated digitization of payment and financial services, where I think open banking, where open finance is playing a bigger and bigger role. I think the official data shows that during the pandemic, during the lockdown, actually open banking payments grew over 800%. So that's probably because people are staying at home and making more digital payments. So yeah, I think it's definitely has been a good role for our industry, for open finance, for sure.
Okay.
It's certainly created lots of opportunity. If you look at the net beneficiaries, then things like payments and lending, where there's been lots of opportunity for new services to develop and new opportunities to emerge from open finance. I think it's also created a real opportunity in terms of the relationships that banks can have with their customers. So this real importance about building trust or rebuilding trust. If you think about all of the uncertainty that we've lived through in the last 2 years, the opportunity for banks and financial providers to put themselves back at the centre of the relationship with customers and earn their trust again is a really important one to seize upon.
So a punch to the gut, but one from which basically people stood up and thought, OK, we're not deflected. Given that, Rita, what open finance partnerships are we already seeing? Which ones have impressed you?
I think a lot, right? Account aggregation has been, growing a lot, and payment initiation for sure. The 800% growth is mainly, referring to payment initiation, which is used to, for retail payment, or, I think one thing that's quite interesting is, open banking payment being used for charitable donation, because every penny saved on processing payment, it goes to the charities, right? That's a quite interesting use case of payment initiation, and like Mode, we're also pushing. My everyday life is about pushing open banking to the merchants world and drive user adoption. So I think payment initiation is definitely an area that's almost a no-brainer that's beneficial for both merchants and consumers.
And let's take that a bit further, Daniel, because look, what do you regard as the benefits for banks and other financial institutions to get involved in this? Why should they bother rather than why bother?
One risk of not bothering is being left behind. If you think of the pace of change and this becoming the norm in the way that people expect to consume their services, there's a real risk that if you're not part of the Open Finance Initiative, you cease to be relevant. I think some of the benefits you can see are really, and we heard it in some of the conversations that we've just listened to, around creating a better experience for customers. So we'll see a point in the future, I'm sure, where we're no longer talking about open finance because it's embedded in what we do on everyday life, but we'll reflect back on it and say, well, how did that happen? Andy and I were talking about this beforehand, say, do you have to tell customers it's open finance, or do you just let it happen and let them share the benefits?
Will they really understand, though, because a lot of it's quite technical anyway, I guess?
Well, there's an argument to say, do they need to? So if what you're enabling a customer to do is to have their data present better opportunities for them, to present more relevant products, to make things easier for them to consume, then maybe it just makes this sort of frictionless banking in the background a little bit more real to people. If I give an example, we were looking recently at how do you enable people to become first-time buyers? And one of the challenges that people face, particularly in a market such as London, is that the prices are very high. People don't have the savings to be able to do that. If you can start to build something that enables a glide path, pull in all their banking information to say you're getting closer because you're saving more, you're developing good habits, you're demonstrating to us that you're someone that we would lend to when the other criteria are in place. That's, I think, where someone would say, going back to the slow money, that's something that's benefiting me in the long term. And you've got lots of organisations who are saying, get into a good savings habit in the short term, put a little away every month, and it starts to add up.
But that's interesting as well, because, you know, when we talk about open finance, we look at partnerships which are happening between the banks and fintech, whatever. What you've described there is a relationship, a partnership with the customer, because you're saving time, making things very seamless. But if you're going to look at the ingredients for a successful partnership, yes, the customer is part of that, but what are the other blocks? What are the other things that define a successful partnership? And where do banks need to place their priorities?
This is one of the things that we really focus on. I mean, partnerships is a real central part of our business. First thing, I think the most important thing is the alignment of objectives. So if the partners both see success, or multiple partners see success in the same way, normally that success is resulting in an outcome for the customer. That's point number one. The culture, bringing cultures together. We've seen a lot of observations around what's happened with fintechs in the UK market, where to begin with, lots of organisations were saying, actually, will fintechs be relevant? Do they understand the market? Will they be around? Then you had almost this movement to say, well, do we acquire them or do we annihilate them? And now, thankfully, it's come back around to a collaboration perspective, where you're trying to bring the skill of a financial provider such as a bank with the risk management, the scale, the customer base, the information, and then the agility, the forward-thinking approach to things, the innovation that someone like a fintech will bring. You put those two together, and that's really where the magic can happen.
And Andrew, let's take it back to the customers, because, you know, we heard there in the presentation with Olivier, and it was expanded on by Peter, our pundit, that, you know, when you look at the customers, once upon a time it was, this is what the customer wants, and that's kind of been flipped. So if it has been flipped, what are the tangible benefits? What do you see them as?
If we take the payments as a great example, I mean, a bit of audience participation, I'm sure most people have made a payment online in the last couple of weeks, mobile browser, seeing some nods. How many of you even saw the choice to pay by open banking? Anyone? There you go. So the customers don't even get the choice to pay, and I'm feeding right into Rita's hands here. But the point being is, this audience probably are the type of audience that would use open banking to make payments, and would not even get the choice. And it's not necessarily, it's there, banks can use it, there's fintechs out there. Actually, there's more parties, so it's the merchants, it's the companies that provide the items they're selling. We need to educate them and bring them on board. So it's a little bit more complex than just saying it's the customer and the bank. You've got third parties, you've got fourth parties. And until we get that expanded, you're not going to see more and more growth, because you've got a great set of customers here and they can't even use the services because they're not available yet. I'm probably giving Rita a great segue.
But in actual fact, the next question is to you, Rita, because what really comes out of that is a consumer understanding of the opportunities of open banking. Because, I mean, let's face it, if you actually went out on the streets and talked to your average man or woman, they wouldn't actually know what open banking is, let alone what it's going to mean to them personally. And you could argue that if they don't really have that understanding, then I wouldn't go so far as to say that it's going to doom it, but it's not necessarily a prerequisite to success, is it?
No, not at all. I think, but of course, first of all, I want to echo what Andrew said. Merchant adoption is definitely very key to the success of open banking. That needs to happen. But consumer adoption, is the other side of the equation, right? In terms of, do customers need to understand the technicality behind open banking or not to use it? Not at all. A very good example is Apple Pay, right? A few years ago, even I didn't, like when Apple Pay came to UK, I was like, I can tap my card. Why do I need to use Apple Pay, right? But they did a very good campaign with the TfL, and I started using it on the tube, and then I never got off, right? Because
You're addicted.
Because it's very easy. It's not harder than me using a card. Actually, it's very easy. It saves me, taking my card. I can just take my mobile. So I think consumer habits are hard to change, but once it's changed, it's hard to go back. So I think for open banking to take off on the consumer side, we do need to solve the incentive issue, though. So if we see, Andrew, if you mentioned, we don't see the button of pay by open banking, right? There are more and more merchants, like probably adopting it or adopting mode, which is open banking based wallet. But when a customer see pay by open banking or pay by your bank account at the checkout, why do they want to use this new payment method, right? What benefits do they get of using this new payment method? Consumers are lazy. They don't want to change habit until they have to. So I think we need to solve the issue of consumer adoption by incentivizing them to change to this new payment method.
So basically, you incentivize and educate them. It's the one feeds into the other, basically, because it achieves the end goal to actually get them to use these methodologies. But Andrew, you're amongst friends here, so you really can be honest as you wish. But where does open finance sit on the bank's list of priorities if you're going to be realistic about it?
It's on the list of priorities, but I think we've all got to be realistic. It's not the only priority out there.
Okay, let me make it easier for you, okay? 1, 2, 3, 4, 5. Is it number 5? Is it number 3?
HSBC's got a lot more than five priorities. I think that's part of the problem so for me, it's my top priority. Within HSBC, we have teams where it is the number one priority, but we are competing internally because actually there's only so many things we can release in, say, the UK, in Hong Kong, in Singapore, and because we're so heavily regulated, everything's got to be done sensibly and in a structured manner. So it's not a case of necessarily rushing forward. You've got to make sure the APIs you release are secure, they are safe, they're stable, they're performance. Because if you release something that's not, that's going to come back to bite you.
Well, thank you so much for your honesty. I really appreciate it. But look, we have covered the basics, and you've done it incredibly well, also setting the scene. So thank you so much for that. What we're going to do now is focus on the practicalities of implementing and making open finance a reality. Because look, we do talk about it, and it sounds very easy in a conversation, but it's the nitty-gritty. So the question has to be, Rita, where do you start if you have a financial institution and it feels ready to go on that open finance journey? Are there first steps that you can take as an organisation or indeed as an industry if you're going to do this collectively? Maybe working together collectively is the best way to identify that first step, or to at least go on it.
Yeah, I think for me, I think because open banking, the main use cases of open banking is account, AISP and PISP, right? For me, as in payment initiation, is a no-brainer. Like today, I don't know if you guys see the news. I saw the news about Amazon stop to accept Visa credit card next year, because the cost to processing payment has always been the most important, the biggest challenge for merchants to drive more business, more customers to their business. So with open banking, with payment initiation, you clearly solve that problem, right? Because if I can move my money from my bank account to the merchant's bank account, why do I need a card in between, right? So I think payment initiation is definitely a very key area of open banking for the industry. I think it would drive a better economy because it drives, benefits for the businesses, who ultimately contribute to the economy. So I don't know if I understood your question correctly, but I think that's a big area. I think there's still a huge potential for the industry to dive in. It takes time for merchants and consumers to understand it. But I think some people would say merchant adoption and consumer adoption is a chicken and egg dilemma, right? But I think on both fronts it's growing slowly, and at a certain time it will reach critical mass. And I think that will definitely hugely benefit our economy.
I mean, you have answered the question. I was really interested as well in the point that you made about the businesses and the ease of getting money into a business account, particularly if you are an SMB. You need that money quickly, and that's often the thing, isn't it, that payments are somehow obstructed when it leaves the customer's account and it takes an eternity to actually reach the merchant at that side of thing. But Daniel, apart from open APIs, I mean, what are the other technologies that you need to actually build this strong open finance proposition?
The two that spring to mind straight away, Juliet, are the cloud enablement. Most of the apps that you're talking about to use for access to open finance are cloud native apps. If you then think about the scale, the speed, the security that cloud offers, it then builds upon that trust that we were talking about earlier. I think the second part is really customer protection. Anything from strong customer authentication, fraud prevention, threat analysis, being able to protect a customer's identity, to give them confidence that when you're giving access to information, you're not giving access to fraudsters.
And Andrew, what's your take on that? I'd love to get your response.
I think the one thing we all skirt around and only mentions is regulators, especially in the banking industry. So in the UK, you've got regulation coming from the CMA, from the FCA, and then in Europe, you've got the EBA. And it takes time for them to work out what they actually want to get to. So at the moment, there's open finance conversations going on. I'm sure people in the room have been involved in them. They've been going on for maybe a couple of years. We've had consultation papers, we've had white papers, we've all fed into these and we've sat around in working groups. And the reason that's important is it works best when everyone moves in the same direction. And we've seen that from the UK. It's been a great example of actually when everyone's on the same API standard, moving in the same direction, you get much faster adoption than, say, some of the European markets or some of the international markets, where you've got a variety or it's open market standard. The problem is to align everyone takes time. And that's kind of where open finance is stalling a little bit at the moment, is we're just waiting for that next stage of alignment to be able to kind of then push forward into the next stage.
That's actually a really interesting point, because look, we're talking about this in relation to banks, but as we know, the financial services industry, it is vast, okay? So are other financial industries actually ready for this? And I'm thinking in terms of wealth, for example, wealth management, also insurance and all the other groups that come out of that.
I'm sure someone would say they are, but I don't think they are. Some of them are further along, so you've got the pensions dashboard. So some of the pensions firms are already looking into this space, and that regulation is coming down the line. Insurance companies, I think they're probably looking at banking, where banking was maybe 6 or 7 years ago. So, at the beginning of the open banking journey. So they've got some learnings to do. But because part of financial services already gone through that initial journey, it should be easier for the others to follow, because you've got market participants who can share their knowledge, share their skills, and move forward. But it'll be a bit of a shock, I think, to some institutions.
Yeah, but let's follow on from that, Rita, because what we're talking about here is an ecosystem which it will never be static, given what is happening with the technology, how that's shaping markets, how that's shaping consumer needs, or whatever we wish to call it. Given that, which players can be or are set to be the champions of open finance, and why these players in particular? What is it that they've got right which the others haven't necessarily got wrong, but perhaps they're very slow to embrace?
Yeah, I think this was mentioned a few times during this session, that anyone who puts customers at the heart of their business will win, right? So that doesn't necessarily mean tech or bank or fintech. Whoever puts customer first will win. I think take like a payment, as I already mentioned, right? Like take payment initiation as an example. I think we need players to actively educate the customer, the merchants, for example, about the benefit of open banking payment, right? Cost efficiency and probably less fraud. All those, during my day-to-day experience, when I talk to merchants, like retailers or merchants in different verticals, actually, you'll be surprised that many of them still haven't even heard about the word of open banking. It's still, we have a long way to go to educate the market. I do think the players have the responsibility to educate the market about the benefit of all these innovations. So the benefit ultimately, goes to what I mentioned, customer-centric, right? It's, what pain points we're solving for them using these innovations. So I think, whoever puts customers first will win.
And Daniel, let's get your take on that, because look, we talk so much about collaboration, but again, putting the customer first and getting something positive out of that. Is cross-sector collaboration perhaps the way that you don't necessarily have to work, one bank working with another? Maybe you need to think outside the box, or conversely, is it the regulator, the FCA, which needs to lead the way in this, perhaps to get that level of encouragement so that industries which perhaps once never imagined they could partner are doing it, and perhaps reaching out to and educating the customer? Is this the way? Should it really fall with the regulator to say, go out there and do it?
The regulator plays a really influential role, and I think in the UK, the regulator is very pioneering, they're very forward-thinking. They were one of the first to put in a sandbox where people could start to use data and test things out. And they'll continue to play a significant role. The degree to which they're able to tie up across jurisdictions. So, one of Andy's challenges, which you mentioned, is HSBC is an organisation which is multi-jurisdictional. It's not one regulator that they need to work with. And obviously part of that strategy would be to solve the problem once and then to try to export that solution across their business, which requires multi-regulator interaction. I think the way that individual clients are trying to solve this is interesting. So we talk to clients where they say it's just overwhelming trying to deal with open banking. There's so much that we could do. How do we focus on the things that will deliver most benefit? Part of that comes to what Rita was saying about putting the customer at the centre and saying what will solve customer day-to-day problems, what will bring solutions in place they'll notice value and pay for. Also then looking at where are problems at the industry level. I was having a conversation with someone in the crowd earlier around fraud prevention, and you say, well, if you could do something around fraud prevention at an industry level, rather than each bank building their own defences, then you have this aggregated industry level data which alerts everyone to a fraud incident as it happens, rather than each person hoping that their link in the chain is strong enough to prevent it. So I think there's regulatory collaboration. There's absolutely industry-level collaboration, and then there's the way in which individual organisations approach the opportunity from open finance.
And at the same time, Andrew, look, we're talking about data privacy. This is the lifeblood of this system. But will customers be willing to actually use these interconnected services, given the amount of data they're going to have to surrender, the fear that if those guardrails are in some way not sturdy enough, the bad actors can move in and steal what is most precious?
I think the answer is yes, they will use the services. But we see that in our day-to-day lives. Every time I use Google or Gmail or anything, I'm sharing loads of data.
But I guess it's the sense that it's an interconnected service and it's taking it to a higher level, something we haven't really tasted.
It is, but the difference is, in Gmail, you're getting a service. So if you don't mind sharing your data, in open banking, open finance, we're not yet seeing enough use cases where people see, yeah, I'm willing to share my data because I'm getting value for my risk of sharing my data. And that's where the next steps are going to be. And the winners we're seeing at the moment are the infrastructure providers who allow that. So we saw ING earlier, and they had YTS up. Now, for those of you who have been around for a while, you remember that was Yolt, and that was a customer-facing account aggregation app. And they've now closed that down, used those learnings to play as an infrastructure provider. And the reason is you can then expand that to a completely new set of audiences. So two great examples I like to use is the dating app example and the doctors. You can use your account aggregation services to check, do you really like going to the theatre? Does my potential partner really like going on holiday? Have they spent any money on travel recently? And the doctor, that question, how much do you drink every week? Oh, I have 1 glass of wine, yeah. Really, because it says here you went to the pub 3 times last week. But it's genuine use case. You're saying, okay, yeah, I did do that. That's helpful. That's actually helping my health by sharing my data with a doctor. Nothing to do with financial services, but it's using my financial data. Yeah. And it's the infrastructure players who they're going to have the real key role to play.
Except nobody wants to be reminded how many times they've been to the pub. Look, let's just close this out really by putting a final question to all of you, because really it is the long-term vision here. Let's project ahead. What does, or indeed should, success look like in the UK market? If I can start first with you, Daniel, and then we'll move it along the line.
I think it's two things, Juliet. Firstly, when we're no longer talking about open finance because it's become embedded and it's part of everyday life, it's solving problems that we see day to day, even if they're behind the scenes. And secondly, I think it's a real opportunity. If you look at where open banking is moving, so we've now seen Australia sort of come online, the US is starting to take an interest. If the UK can use its relative maturity in open finance to maintain a position as a fintech hub, as a centre for innovation, as a centre for financial service innovation, that to me will be a real positive.
Okay, Rita.
I will very much echoing what Daniel said. Like, we're no longer talking about it. There will be more practitioners that are actually out there pushing it to solve businesses or consumers' problems. Practically, like for example, better payment services for businesses, better credit services to consumers. I think these are the areas that we see lots of pain points.
Mm-hmm. And Andrew.
I think if I ask that audience question again,
yeah, go on.
If I ask that again in a few years' time, I'd like to see everyone nodding. Yeah, I did see open banking as an option, and it was the top option. For me, that'd be a great win. And then customer adoption going up and up and up. It's already higher than it was, but across both retail, but we've not really talked about corporate clients and SMEs, but also across that segment as well. Seeing more and more adoption across those segments, especially in the SME sector. I think that would be a real bonus, because that'll help drive their own client usage.
Okay, look, we're going to have to close the discussion, but it's been a really interesting talk, and I think you should all give yourselves some applause. We're going to applaud you as well. Okay, but what we're going to do now is bring in the pundit, Peter. Peter the pundit. Peter, are you there? Fantastic. Look, it's really good to see you. I thought that was a really good discussion. There's so much that came out there, but also just looking at some of the basic concerns, how you can actually make sure that when you have this system, everybody gets drawn in. It shouldn't just be confined to one part of the user tapestry. But what was it that really stood out for you in that discussion? What were the key takeaways?
Well, I think one thing that's really interesting is all the panelists were kind of talking about there's a huge amount of activity happening like below the glass to get the plumbing right, to be able to make something like a payment take place in a unique and novel way. But we also know above the glass, a lot of times the consumer isn't really asking for another way to make a payment. But once something is presented to them in a way that's seamless, that's easy, that above the glass creates something quite dynamic and meaningful, that drive to adoption and that sort of clarity of why I'm using it become really, really profound. And I think that to me is the real power of this API economy, this open banking approach, which is we can take this sort of robust ability to move data and insight and payments around below the glass into that above the glass experience for the consumer. And I think it will be those organizations that understand what it means to be customer centric that will become successful. I couldn't agree more. But I think that notion of customer centricity is about applying the research and the insight and the test and learn, that kind of innovation mindset to openly discover what are the things that consumers will do if we present it to them. How do we change their behavior and get their behavior to engage in ways that are meaningful? My final thought in the back of my head is that we spent a decade investing in making payments more frictionless and using this technology to drive more seamless connectivity with our fast everyday finances. And I'm really excited about things like that are mentioned, like Pensions Dashboard and the TISA Open Savings Program. We're going to apply the same technology, the same sort of superpowered data insight to helping consumers save and plan more effectively for the future. And then I think we'll start to see a real robust impact in many different ways over the next decade, hopefully.
Yeah, so that's what awaits us if we all follow the script. But what are the most exciting open finance partnerships that you're seeing at the moment that have really impressed you?
Well, I have to say, I think that banks are collaborating together in ways that would have been surprising a decade ago. I think that someone on the panel mentioned that, there were challengers in fintech showing up 5 years ago saying they were going to take down the incumbents, and now that level of partnership is really driving and making impact. I think a lot of European banks and UK banks are also looking to Asia and to see how super apps and that ability not only to kind of take financial behavior, but the entire sort of all of the different aspects of our lives that are converging on the home screens of our devices and use financial services and banking as a way to navigate them. I think those partnerships are really profound. And I do think it's when sector convergence starts to happen that you start to see really radical and revolutionary new ways of thinking. When you take a financial services organization, a telco, and a retailer, suddenly that notion of being able to build a lifestyle experience that has finance at its heart becomes really profound and legitimate. Whereas I think sometimes when banks try to go it alone, we don't really have all of the dynamic customer brand relationships that we need to drive that kind of more comprehensive thinking. So I think partnerships are going to be critical, not just with tech providers, but with other incumbent brands on the high streets that working together suddenly create a different view and a different way of engaging that same customer.
I mean, look, just to sort of nail it down a bit further, are there specific players that you perhaps have identified as the real champions of open finance, the ones who are really going to lead the way out of this? Or through this, I should say.
I mean, you have HSBC on the panel today, and the open, this is in the public domain, the partnership with Bud. I think, again, using open banking to get right in the heart of the mobile app and inform and help customers understand more about the financial choices they're making, use that insight to make product recommendations outside of banking. I mean, I think that's a really powerful example of it. So I think all of the CMA9 banks, and especially the ones that have really had to invest in that underlying technology platform and get that legacy working, are really beginning to see the benefits of that now because they've got that capability and they can use it for more than simply meeting the regulatory requirement. And I think organizations like HSBC, all the high street banks in the UK that have made that investment are really driving forward and thinking through this in a way that's creating value for customers and also transforming traditional products into the next generation kind of digital and virtual banking products they need to become that are more personalized, more focused on data, and just more engaged, trying to and asserting themselves to become more engaged in their customers' financial life, finding the right levels of permission to do that.
Peter, I want to close this out really by getting your highlight of this session because so much has been discussed. It really has been a massive, massive journey that we went out on this morning. It seems like, well, it was hours ago, I suppose, but really we started off at 10 o'clock in the morning. We were talking about some of these ideas and now they have all come together. So for you, what are the key highlights?
Well, I think one is this API mindset and what that really means. And I think for banks to start to think about presenting their products and services into channels they don't own is a really radical departure from the traditional notion of what digitizing financial services means. But I think it's an extraordinary opportunity for banks to really explore and rethink their role in the future of virtual economy. I think the second thing that came through loud and clear is that, innovation isn't just about trying out new things. It's about getting robust commercial propositions into market, getting them to scale, and learning from the things that don't work and applying that back very quickly. And I think the other thing that's been present in all of the conversations is for all of the technology that we can deploy below the glass to get this to work, it doesn't really matter to the customer. If we're not being customer-centric in the application of that, if we're not learning and understanding and co-creating and demonstrating empathy and building trust with customers to really get close to and invent the experiences that they're going to need in the future, we're not going to win. We're not going to be competitive. I agree with the panelist just recently who said, the customer centricity, that's going to be the place where we're going to see the winners come out in the end of the game.
Yeah, I think it was Rita who made that point.
Yeah, sorry, Rita.
But we all agreed with her. But look, Peter, thank you so much for your analysis of what you've heard, also making the time to be with us, your second appearance. There may well be a third appearance somewhere else, is there? No?
I would hope so.
You'd hope so.
Keep me on speed dial, Julia. And I wish I could join you for the champagne in the hallway, but have a great time.
Oh, thank you very much. I was going to say we'll save you a glass, but I wouldn't hold your breath. But look, thank you so much for that. It's been such a pleasure seeing you today and also having your involvement, a brilliant contribution. So thank you so much for that.
You wanna dance?